Investors are awaiting Fed Chief Jay Powell's Jackson Hole speech scheduled for later this morning. Joining us right now to talk about it is Marta Norton. She is Chief Investment Strategist at Empower. Big moment, particularly in the quiet days of August, Marta. This is something that the street's definitely anticipating with bated breath, I guess we should say. What do you anticipate hearing from the Fed chair today? What impact could it have on markets?
Well, I think the first thing that's worth talking about when we think about this Jackson Hole speech is that a lot of folks are looking for clarity on what's to come in September in terms of the potential for a cut. And I really think what we've seen from Jay Powell at almost every press conference, especially at this point in time, is an unwillingness to tie his hands. So I think there's going to be a real emphasis on discussing, the concerns around tariff-induced inflation and also thinking about the latest payroll report that we had and the revisions that came with it, the concerns that raised around the labor market, and really talking about the push-pull between those factors, but not necessarily front-running what that September decision looks like. And that's a departure from what we saw last year, where there really was a nod to what was to come in September. So I think that's my first expectation. Secondly, I think the real focus is looking at this long-term framework that was put in place back in 2020 and assessing whether that average inflation targeting is still something to maintain going forward. And I think that's a really critical long-term conversation.
If Jay Powell doesn't commit to a cut, which I would think most people are not anticipating that he's going to come out and say, yeah, this is it, we're going to cut rates. Does the market react? As long as he doesn't say there's no way we're cutting rates, does the market kind of just float along the way it's doing? Because, by the way, the market's doing pretty well.
Right. Well, what's interesting is even a week ago, we saw the futures market pricing in 100% probability of a cut in September. And we've seen that pull back over the past week. And I think that relates a bit to some of the comments that we've heard from Fed officials that have pushed back against that certainty of a September cut. So my guess is that the market will be able to take that in stride a bit, though, of course, the emphasis is on a September cut. That's where the preponderance of bets are today. So if we don't receive that in September, then of course I think there is potential for at least some volatility.
I know this is a big day. People have been anticipating what the Fed chairman's going to say, but really earnings have maybe been the more powerful focus over the last couple of weeks. And earnings, for the most part, have been pretty good.
Yeah, it's been a really strong earnings season. Now, of course, we had a very low bar. Thinking through FactSet numbers, I think they had analysts' expectations of earnings growth at around just under 5%. So that's a hurdle that's pretty easy to clear. But not only did companies clear it, they kind of soared over that hurdle with earnings growth coming in somewhere between 11, 12%. So a very strong and kind of typical earnings season that I think pushed back against concerns that I and others have had that tariffs could weigh and just kind of a weaker economy could weigh on these earnings. Now, that doesn't mean that there aren't concerns going forward, but yeah, there's certainly been a lot of demonstration of fundamental health when we're taking a look at how companies have actually performed.
So have you been surprised by how well the markets have performed and held up?
Yeah, I think I have been surprised. When we take a look at what's happened with tariffs and with global trade in general, really what we've seen is a sea change. And I think when you see that level of shift from trade policy, the expectation is that at some point we're going to start to see some ramifications of that, whether that's in the economic data or whether that's in earnings. And yet it's really been muted, if any effect so at all. Now, I think one of the mistakes that I and others have made is thinking that the timing would be instantaneous. As we take a look at how companies have performed, how they've navigated these tariffs, there's been a real ability to be nimble. But now as we start to see these tariff rates come in play, I think at some point we are going to see some measure of impact. Whether it's going to be a meaningful impact or not, that remains to be seen. But I think over time we will start to see, this tax that companies are actually paying when it comes to tariffs, that will start to see some effect on earnings.
Well, do you think this is the high water mark then, or do you think you're not necessarily calling high water mark, but you're telling people to be prepared, investors to watch out?
I think there's some reason to rein in expectations. So if we take a look, at expectations for Q3 earnings, those are better than what they were for Q2, but they're still not extreme in terms of really positive expectations. And I think as those tariffs come through, that could weigh on earnings. When we're also taking a look at valuations, a lot of good news has been priced in the market, at least for the near term. The market has run very far, very fast, and it has been broad-based. So yes, tech has led, but we've also seen areas like industrials do quite well, financials, consumer staples keep in line with the overall market. So I think there's been a certain amount of euphoria that has been priced in. So having some measure of circumspect perspective would make some sense here.